All right, no video yesterday. Wasn't feeling 100%, so decided to take the day off with videos. Didn't take the day off from working, but I record so many videos, just felt like it was a good time to take a day off. We're back today, and the rally continues. What are we doing with this rally, and where do we see the market going? Well, the rally is certainly welcomed. We are overall very long in this market. However, we're very cautious at the same time. We are concentrating our bets in our highest conviction assumptions. For example, that yields will rise, that energy will do well, and that 10x growth companies like CRISPR Therapeutics are very well priced for their long-term growth potential. And when you annualize that back, they can get tremendous, far outpacing the market beating returns. And they're well below pre-pandemic levels. I said CRISPR Therapeutics, but I'm also looking at Editas, Smile Direct Club, and many other names in this growth space that has had a tremendous week thus far that I like. However, I don't like the latter stages, the last couple days, the fact this rally has continued very much, and that there is this, kind of feeling of exuberance. Even I have it. I am noticing that I'm making quite a bit of money, and that typically puts me on edge, makes me question things, makes me take a look at things. And I did take a look at things. So today feels good. Yesterday felt a little down, but it didn't feel like a shock, so no big deal. Day before that felt good. So if you look at all 3 days in aggregate, actually doesn't look that crazy. We're kind of just forming this volatile 3-day technical range. And I don't like getting into these 3-day technical ranges, but we're bringing them up because I think it's something we got to look at right now. Why is it something we got to look at right now? Well, let's not take our eyes off the Fed, but the market seems to be doing that just for a split second. This past couple days, since the Fed spoke, since Powell spoke, the Fed has spoken since, but since Powell had that big meeting last Tuesday or whatever, the market has gone from acting as if the Fed was going to tighten, which was leading up, to when the Fed announced officially, as expected, that it was going to tighten, acting as if they were having loose policy again, doing exactly what they were doing before. And for a day or two, if you go back to the videos there, I said 1 or 2 days, maybe 3, that's going to be okay. Maybe we were a little oversold, and then we'll get to some sort of sideways market. Now, I think we're getting a little too elevated, and I'm not a short-term trader. Most of my stuff is longer term. I have some options. They're typically a month out or more, sometimes several months out, sometimes a year or more out options. That's how I play, but right now, I'm just trying to highlight that this has been quite a strong move, and it seems like the market has taken its eyes off the Fed because the Fed came out somewhat dovish, somewhat hawkish initially, and has since, as the market has rallied, become significantly more hawkish. And this is not, the Fed meeting everyone's tuning into. This is something they bring on CNBC for 15 seconds and then put it away. You might see a couple tweets about it, but it is not really a big deal in overall market sentiment. But that is typically where we can get our edge. And it seems to me like rates are rising quickly. The market is not reacting to that. So maybe the bond market, as it typically does, is being a little smarter and being a little bit more reactive to all the pieces of information than the stock market. But the market is kind of missing this increase in hawkishness by the Fed that has likely picked up in the last couple of days because the market has had a reaction that they didn't fully anticipate. So I'm not saying it's too crazy yet. I think Editas, for example, one stock, is still very, very cheap. I think there are plenty of stocks that are still very cheap. And they're not just these growth stocks that have been down the last year. Intel, one of my largest positions, very cheap. JP Morgan, still very cheap. But there are also stocks that are still quite expensive. And there are stocks that are not necessarily participating in a day like today. In a day like today, we're seeing a company like NVIDIA doing very well, but Amazon slightly red. And it's Amazon. And it's down from its high. That is Not saying that it's a, major signal, but it is a little bit of a red flag that Amazon is down today when the Nasdaq's up 1.5%. You would think Amazon's a pretty rock solid stock and company, and a lot of people exited and would be entering because, you would try to make the case that right now we can, turn a blind eye to this very quick rally because people got out of positions and they needed to refill, get back up to a little bit more normal allocation. But I don't know if that's the case entirely. I'm sure that some level of that dynamic going on, but Amazon is down. Okay, you can't ignore the fact that Amazon is down today. It's kind of a little bit interesting to me. That means some stocks are up tremendously because it is a big component of the Nasdaq. Nvidia obviously up quite tremendously. So I think this is a short-term move. Do I think we're going to sell off here and we're not going to return to these levels? No. I just think the market needs to kind of get its bearings a little bit more. And believe me, I'm participating in this rally very well. I'm outperforming. I'm up quite a lot this year. I'm not saying this as a cope because I'm missing it and I'm trying to, compensate. That is not the case. I am fully participating in this rally. But I'm also taking a couple of small bets for some clients that have a little bit more risk tolerance and buying, 5 minutes before the close today, QQQ puts at the money expiring tomorrow. I think that has a very good chance of being up 200% because I think the probability of a pullback tomorrow is quite high. So let's just chill. Let's continue to do the fundamental work, focus on price, that kind of stuff. Not look for momentum. Do not look for momentum. My point here is that momentum should not last. It should not be a liquidity-driven market that just springs off a bottom and goes for the foreseeable future. We are in a liquidity tightening environment. We are in a war environment. We are in an inflation environment, and we may be in a recessionary environment. I don't really see a whole lot of people nobody's talking Goldilocks anymore, okay? Nobody's talking Goldilocks. People were talking Goldilocks. It was a Goldilocks environment for stocks, and stocks had a Goldilocks return because of that. But it is highly questionable whether that is still the case. Some may say no. I think there's, I'm not trying to say there's absolute certainty to get bearish, but I would definitely not say right now is a Goldilocks environment if for the Fed alone, which the market seems to have taken its eyes off of in the last couple of days. So I'd say use that to your advantage. I think this market is ultimately a sideways and choppy market. I think the highs of the year are in, possibly the lows of the year are in, and that gives us a quite big range to trade within, but there's quite a lot going on. There's the Fed, the market will react to the Fed, but I don't know if it's going to, crash because of the Fed. I don't think that's going to happen. I think only if the Fed induces a recession will that occur. And while I brought up, recessionary environment possible, still very possible. I don't necessarily think it's going to happen, but it's on the table. People are talking about it. We've had tremendous growth. Is it going to flatten or is it going to pull back the economic growth a little bit? I don't know. I think there's a good chance it just flattens, it slows down. The labor market's staying tight. Today we're getting, not record low, but lowest since the 1960s in terms of unemployment claims. So the potential for economic damage is not tremendously high. But anyways, like I said, I'm participating in this rally. It's not a cope. I'm not trying to be over bearish, but I'm cautioning you against being over bullish right now. So that's today's video. Hope you enjoyed it. Feel free to ask questions or leave comments below. And until next time, peace out.